So why do people today invest? Well, the obvious answer is they want to make money, but there is something else. When you ask people, how do you want to invest? Then 85% are going to tell you that they want to invest sustainably, meaning sustainability is really important. So what we've come up with at Ziggma is that we want to build a tool that allows you to do both, to obviously make money when you invest, but at the same time to also do good, to have a positive impact. Now, why is it so hard at the moment to do these things at the same time? Well, our persona Houston basically has got this problem that he's not able to optimize his investment decisions for these two things, returns, but at the same time, impact. And why is that? Well, first of all, it is very hard if you're having different asset classes, different investment accounts to gain an aggregated understanding of your portfolio. And then the second point is that there is basically no solution out there which allows you to capture both your financial returns and your financial analytics, plus what impact, for example, what carbon footprint your entire portfolio actually has. Now, all this comes at a time where about 89 million Americans are owning stocks, where 11% of them are saying, we're currently voting, but 80% are saying, hey, I actually want to vote my stocks, especially on issues of sustainability, on ESG, environmental, social, and governance issues. So what we've come up with at Ziggma is that we're creating a wealth management app that obviously does both, combining returns and impact. The solution we've got is fairly simple and fairly straightforward. We basically allow users to go through a 4-step journey. Number one, we aggregate all your accounts and allow you to track all your holdings to understand your net wealth. Secondly, we allow you to optimize your portfolio, both in terms of financial indicators as well as in terms of climate or other sustainability-related performance indicators. Third, we allow you to take new investments with good financial decision-making. And finally, we allow you to engage with companies, especially whenever there's things that are not going well, meaning you're observing any kind of environmental, social, or governance issues. So what's in it for customers? There's 3 core value propositions why currently people love what we're building. One, they're in control. They're understanding their wealth, they're understanding where they're headed, and they can make a plan as to what their spending and saving goals. Secondly, obviously, we help users to optimize their financial returns. And finally, we make sure that everybody has a positive impact on the world. Now, how exactly does that look like in terms of impact? Well, our goal is to reach 17 million users. And most importantly, we want to make sure that over half of them are voting. That means that we would see a gigantic increase in all kinds of ESG shareholder resolutions, which could virtually impact all sustainable development goals. How are we going to do this and how are we going to reach our customers? This is where we see much of our secret sauce and much of why it makes so much sense from a business perspective to actually combine returns and impact. So what we've seen is that with shareholder engagement projects, we're able to generate huge PR stories. You might have all heard of ExxonMobil, big case where basically pretty small shareholders got together and changed board directors at a gigantic oil company. So we see a lot of room for PR stories. We see also a lot of chance for developing what we call the shareholder democracy, meaning if people start using their stock voting rights, they want to push an issue. By the way, 20% of our users want to actively participate in forming shareholder resolutions. Then that means that they want other people to put their assets behind their resolutions, meaning they're going to ask their friends. Long story short, we believe that we can trigger network effects. Finally, our last channel, partnerships with brokers and activists. We're already working with the first 2 brokers because we also enable in-app trading, hence brokers sending their customers to us. We see a large market, a $27 billion market globally, and we do actually believe that this market is even bigger in the moment that currently people that are not interested in investing for any financial reasons want to start investing in order to have an impact on large corporates. So what we've been building is pretty unique. It's live, up and running with 22,000 users. And on average, these users have connected 500 million, So the total connected assets are 500 million in assets linked, assets under review on our platform. And the average user has about 400K of his net wealth linked to our app. So we believe that we can stand out, or we know that we can stand out with a couple of unique selling points. On the side of financial things, we're able to track fundamental financial company data and ESG data. And on the engagement or impact side of things, we're going to offer monitoring of your entire portfolio and a voting integration, so you can basically vote all your stocks at the click of a button. In terms of the team, we're pretty diversified. Uli has a background in financial services. I myself am a third-time founder now, and the last product I've been building is an engagement management solution for institutional investors. And then Chris and Para are heading our operations on the technical side of things, with Chris being a PhD in computer science and having specialized in databases, and Para being our magician when it comes to financial analysis. We've got some support on advisors, and with that, we've just started to fundraise. So we're not yet fully live with our fundraising, but we have started to reach out to our warm contacts to hopefully close a lead investor in the next week. The timeline then, our MVP is live. We've got the first 1
minute warning.
Thank you. We've got the first 1K in monthly recurring revenues, and we're obviously hoping to be able to scale that with improved marketing and also with improved product. What that means is that we're opening the raise in the next week. We're looking for around 1.5 million in seed funding, and the main cost of that are obviously going to salaries for enhanced product development and to marketing. Thanks so much.
So one question while I bring in all of the other investors. You said the average amount of funds that every client has linked is 400,000. Is that how much they have invested through you guys, or is that like Wealthfront? I've got my bank accounts, etc., so I can track how much money there is in total.
Correct. That's all your Fidelity accounts, Robinhood account, your IRAs, your whatever pension schemes you might own connected to our app.
And then are you then doing analysis on those funds?
Correct. Yeah. So we give you, and that's also where the first USP comes in. We are giving you a portfolio view of your aggregated portfolio, and we do a couple of things that are unique here. For example, what other portfolio management tools are not doing is to actually aggregate. If you're having the same stock in different accounts, we actually aggregate that into one position. So that's one of many kind of unique features.
Okay, understood. And did you mention a business model?
Yeah, so it's a straightforward SaaS as a main income stream. And then we've got also some referral relationships implemented. So we've got a section on our platform where you find, if you're looking, for example, to diversify into alternative investments, then we give you all kinds of alternative investment solutions in the crypto space, arts, wine, you name it. So there is some referral revenues coming in as well.
Awesome, thanks.
I can get us started. So one question was just, so you have just one single subscription tier at the moment, is that correct? There's no kind of like tiering of the different features?
That's correct, with the obvious idea to expand.
Okay. And then can you tell us about like what features are sort of driving the growth of the product? So why are people kind of coming in, and then versus which are the ones that are driving your retention? So from what you've seen from the 22K users, how exactly are they using the app? What features are really the most important? And then I guess I'm sure that there's some regulatory stuff in this case as well. So tell me about kind of any hurdles that are coming up on that. And then, sorry, I gave you like 5 questions at once, so maybe I'll stop there and let you answer those.
I'll start with the first one. So in terms of growth features, what we see is that, and that's, I guess, where I tried to start this with the problem, people don't currently have a full view of all their aggregated holdings and their net wealth. So that is really the, I guess it's a key basic factor that drives most of our users coming. And that's also where, that's something which we can do fairly easily. People connect to a third-party provider, Plaid, they connect all their accounts. And then where the hard part comes in is all the financial analytics, the tracking. So giving people really a consolidated understanding, consolidating different stock accounts. That's something where we see that many companies do it, but nobody does it really well. So that's, I guess, the main driver of growth. And then there is a second one that is unique. We have created a stock simulator. So if you want to understand what is the impact of the next trade that you're about to do, then we're able to simulate that, which is something that institutional investors are obviously doing to understand what impact their trades are going to have on a portfolio level. It is something that is not yet in the market for retail investors. As to the features that then drive retention, we do believe the product is pretty sticky. And the main reason for that is that obviously you want to understand your portfolio over time, to understand the performance of, how did your risk, your diversification improve? Obviously, how did your returns improve? What are your dividends? What is your income? You name it. And again, it is something that many companies claim to do it, but nobody does it at a sophisticated level. So we see a lot of improvement here over competitors. Finally, the part that we haven't talked about yet at all, I guess, and that we also don't see with the competition is the part of engagement and shareholder resolutions. So as mentioned in the beginning, it's just 11% that actually vote their shares. Our own surveys tell us that 80% of the people would like to vote, but it's just too inconvenient right now. If you get the occasional letter for your stocks into your brokerage account, but you don't even get them to your email. So pretty basic features which people are missing, which they would like, and which would really drive the impact that they could have on listed companies. So that is the other one where we believe we see a clear gap in the market, which is going to keep people engaged.
And that feature you haven't already built.
That is something.
Okay.
There is so yes, we do actually have. So for every stock that you own, you can set an alert to get notified when there is an ESG vote coming up. That is something you can do already today. However, what we haven't done yet is that you're able to execute your vote from within Ziggma. So that is something which obviously needs a bit more work on the back end, integration with the voting chain, integration with all kinds of financial intermediaries. And that is something that we just couldn't build for now, given resource constraints. Which leads me to your last question, regulation. Yes, regulation is a topic. It has, for example, to be perfectly upfront here, we have got broker partnerships in place, and we want to work with these brokers, and these brokers would be happy to pay us for payment for order flow. Meaning, if clients are executing their trades within Ziggma, then obviously if we forward those orders to our brokers that are connected to us, then they would be happy to share the profits on that. That is something that the SEC has come down on, which is not possible to do anymore. Hence, that was a revenue channel that we had to cut. For the rest, it could be that in the future we ourselves would, for some reason, like to obtain a broker license. However, that's not on the near-term roadmap, and in that sense, we're also, I guess, for the most part, unregulated.
Could you just have advertising for ESG stocks?
If we can do that?
Yeah, could you just let companies that had high ESG ratings or money managers that had ESG funds or ETFs just advertise?
Yeah. So as far as I know, when you're advertising, then you are a financial advisor, meaning we would need a license there. However, as long as you're simply making assets searchable, which is something that we already do, without giving an investment recommendation, then you're not a financial advisor. So that is something that we can do. Yeah.
Is that a financial recommendation though? I mean, if Google has a paid ad at the top of the search results, are they recommending it?
Clear, no. As long as you're not giving an evaluation as to whether this is a good or bad investment, but you're simply giving, for example, fundamental data about the company, and then obviously everybody has to decide themselves if they believe that's a good investment or not. No, I'm pretty sure that's no concern whatsoever.
Building up on that.
Really interesting. Oh, sorry, go ahead.
Oh, go ahead. Maybe just to quickly build on that, I think I read online that you have a climate score. how does that relate to the recommendation aspect on one hand? And then two, how is that being calculated and how confident are you in those results?
Yeah. So the climate score has got to answer the last one first. How's it calculated? So the climate score is unique in the sense that we are compiling a track record of how the emissions of corporates are developing. So for example, Microsoft might be considered a pretty good ESG friendly company. However, their emissions are actually currently increasing. So overall, their levels are okay and they get good ratings. However, currently their emissions levels are increasing. And that is something that we show because we're not giving you a momentary kind of statistic, but we're giving you a track record over the past 3 years. That's number one. The second aspect that is then really important and that is part of the climate score is whether a company is net zero committed or not. So those are the two main components of the climate score.
Does net zero include greenwashing and carbon credits?
I'm afraid at this point, so obviously we're working with data providers, and I guess as far as these data providers are not able to account for any greenwashing, we also can't, quite frankly.
A couple of quick follow-ups, but first, really interested just a little bit more about like defensibility and sort of folks like Empowerment, like what's stopping them from kind of building and taking market share sort of in the near term, and then just anything I want to add around defensibility.
Yeah. So first of all, what we see is that, and I know this is a question we've been discussing with Matt beforehand, actually, we've built a couple of features that are unique and that we believe we can build very well because we're both from the engagement side of world, that's where I'm from, and Uli from the asset management side of things, from the portfolio management side of things. So there are a couple of pretty basic features when it comes to the financial management, to the financial side of portfolio management that we have already built and that are unique at this point. The second aspect is then that we believe there is a pretty relevant network effect here, and that is the moment where we're able to once again develop the tools for shareholder engagement. The idea where, by the way, also a lot of other companies are currently gaining traction and are raising relevant rounds, and which is a bit of an up and coming space, is the idea of enabling retail investors to vote. Why is that so important from an impact perspective? Well, quite straightforward. When asset managers or other big institutional investors vote, then there is always kind of a political component, and that is what retail investors do not have at all. So if you are a retail investor, all you care about is that the planet is looking good for your grandchildren, and that just takes a whole complication out of the equation. It's quite straightforward that most of the people today are pro ESG and want to vote according to that. Meaning, if we manage to develop a community around shareholder engagement, then people will put forward, as I said, our own survey, 20% of our users want to actively work on forming and creating shareholder resolutions. So these 20% will try to get assets behind their resolution to make sure that they're successful when they go to the annual general meeting of companies. And that is where we see huge room for network effects and for a shareholder democracy. And that's, by the way, also the reason where we see kind of a clear first mover advantage. So if we're early with this and if we're able to capture this market, then yes, network effects would make for the defensibility.
Makes a lot of sense. And just really quick follow-ups. I love the vision, around sort of removing barriers for retail investors, to become more engaged and kind of proxy voting. Like, I think awesome vision, but I know this is a problem that has kind of existed forever, and just kind of curious, why is now the time that now allowing kind of, is it something that there's a technology integration that wasn't previously available? Is it something where there's a critical mass of, number of folks, that have ESG preferences? Why is now the right time to kind of solve the problem of retail voting?
Yeah, that's a really good one. And I see kind of two parts, two answers. So there is indeed a technical one, and that is that open banking is around since a while. Open brokerage, to make that a sub component, isn't still to date not perfect, not great. So there is API providers which we're using, and which is exactly the reason why the time is now. Literally, I believe there is a 2021 YC cohort startup, SnapTrade, which we're now going to use to enable the in-app trading. And they are about to launch their product. We're going to be one of their first clients. So this is literally, state-of-the-art technology enablement. I think the second part of the answer, why now, is that if you look at a couple of trends that have been happening recently. So think of Wall Street bets, where people are already kind of organizing in an unstructured format. Think of the sheer amounts. I think it's about 68 trillion that Generation Z and millennials will inherit over the next 20 years. So if you consider, Greta Thunberg as kind of the persona here, these people are serious about ESG investing. And that's, by the way, also something that you see when you look at ETFs and funds. There, all kinds of ESG labeled funds are already the fastest growing asset class. So people do actually put their money where their mouth is by now. And that's why we believe there is a real need. But as Matt has mentioned, there is also a gigantic problem, and that is that there is so much greenwashing going on. So, that is where we see the big differentiator of all kinds of, all kinds of sustainable investing solutions that are helping you to select ESG stocks or to go into alternative assets. The problem of, oil majors, all other kinds of corporates that we need in our economies, and that they're doing important jobs, but that still need to transform. That is a problem we have to solve. We can't run away from by just, allocating our money to someone else. These guys will still be around. And so those trends together, to kind of sum it up, that investors are getting more active, financial intelligence is on the rise, Wall Street bets is happening, that ESG is an important topic that's on the rise for new generations that are literally going to feel, most importantly, climate change impact. All these factors combined show us that it's time for this shareholder democracy, and I would like to say shareholder revolution, to happen.
I was just going to ask about, so you talked about the alternative investments. How does that fit into your ESG strategy? Because some people would say that like a lot of those things aren't really like impact aligned. So that's one. And then the other was going to be around, you mentioned the referral model, and kind of, I assume long term that's going to be like a pretty important channel for you. So tell us more about kind of the roadmap there.
Yeah. So as of now, we've got, I don't want to give you the wrong numbers, so I'm going to log into our platform and give you the exact one on the side. But there is a bunch of different categories online right now. As to, alternative assets and whether they can be sustainable or not. Short answer, the first partner that we've signed onto our platform was Raise Green, so it was actually sustainable investments. Secondly, yes, we've been discussing back and forth the question, for example, are we allowed to offer Bitcoin, cryptocurrency products in general, given the energy that they consume? My personal stance is that, if a crypto mine, or in general computing power, is financed or is powered by renewables, then we're fine. So I'm personally not convinced that it's an issue with cryptocurrency. I believe that it is a technology that we do need after all. It's more a question of who provides the energy, and as far as we can solve that, I don't actually see a concern. And I guess as far as other asset classes are concerned, consider art, consider gold that we're offering. By the way, we've also got a category for getting advice if people are, ever at the end of their personal financial knowledge. So as far as these products are concerned, I see them as climate neutral, no major impact. And then you do have to remind me of the second part of your question. I believe it was about monetizing all this.
Yeah, it was about the referral partners. So kind of moving on from your initial 22K. Right. Yeah.
So what we see at the moment is that, first of all, reaching those partnerships is very easy. So we've onboarded 3 to 4 partners for each category, which, by the way, I'm just counting. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 categories. A few of them I've mentioned already. So onboarding partners here is fairly straightforward. And considering that in financial services, the customer acquisition cost is around $80 to $200 per customer, depending on where you look. Also, what you're getting per lead. So the cost per lead that we've negotiated with most partners is around $125. That's the average. And working with that is obviously very attractive once we send them meaningful traffic.
Do you pay before or after? Do you pay when they sign up and pay you, or do you pay when you get a lead?
So we get paid when we send them a lead, which is typically defined as a sign up on a landing page.
Okay. I thought you weren't. I thought you were a referral partner. Sorry.
No, we do also use or plan to use affiliate partnerships in the future to actually get clients, of course. So it's going to be a revenue stream for us, but it's also going to be a marketing channel for us. Note that in our marketing mix, I've tried to explain earlier that we really try to build these product-led growth features into our product. Plus that we're planning on doing a lot of PR and content with the shareholder engagement stories, which are going extremely well as lighthouse projects. So we believe that overall, and that's one of the sweet spots of our business, is that we see a very low customer acquisition cost ourselves, and at the same time we're able to generate quite significant referral revenues.
I was just going to say a lot of these strategies seem to hinge on like you having that the shareholder activism features. Yeah. And it sounds like you have like kind of a very MVP version of that now, and the real version is kind of a ways off. Like, is that kind of like, where is that actually in your roadmap in terms of timeline that you'd be able to start a lot of this?
So there is a couple of low-hanging fruits. For example, next week, we're going to send out a voting alert to all Amazon shareholders on our platform because there is an ESG resolution coming up at Amazon. So low-hanging fruits, for example, sending out voting alerts on ESG issues is something that we've already got and where we see significant interest. Anything else that's getting more complicated, which means anything that's kind of considered tools that allow investors to collaborate and to form a shareholder resolution together and then to bring it forward, which is a lot of kind of both research work, but also bureaucratic work, and to provide those collaboration tools. And secondly, to build the tools that really allow us to execute your voting rights from within Ziggma, just like we're already working on in-app trading. Those two features is exactly the reason why we now need to fundraise.
Some questions on the impact side. So far, we've really been talking about sustainability and climate, but then you've also been using ESG when talking about the overall impact. Are you planning to grow into the social and governance aspect? Is there a broader view of impact that you're looking at, or is it going to be solely climate focused?
We've started with climate for the obvious reason that it's probably the most relevant topic we see at the moment. Plus, the second point is that it's the topic where there is most data available. Hence, you're able to kind of make fundamental decisions data driven. That's much less the case. For example, if there is now databases being developed as human rights indicators, and obviously many social issues. For example, diversity. It's slowly becoming measurable. We slowly get more data on this, but it has been very difficult in the past. So long story short, obviously we want to cover all aspects that we see in this ESG space. However, data constraints and obviously that we need to focus our efforts in the beginning have led us to start with climate.
Got it. And then in terms of the customers that you have today, are you seeing them make different decisions based on the climate score that you have provided?
So it is really hard for us as long as we don't have the in-app trading feature, right? We cannot track what users decide at the end of the day. So it is an analysis that we do not have a lot of insight into. I must admit, quite frankly. So yeah, I wouldn't be comfortable to make kind of a data-driven statement here, just because we don't have that data. what we hear from our customers, from the conversations, is that people do use it as a negative. So in our stock screener and our ETF screener, you can set a lower threshold where you say, hey, I only want to see companies with a Ziggma climate score above 50, and that is something that is very popular. Yeah.
But just to clarify, like, so in that optimization part of your features that they can't actually, like, so they can see what, but they can't actually act on that at that stage. And what are there any low-hanging fruit features in that optimization category, not just the kind of view and consolidate category?
Yeah. So when what we do provide is both on an aggregate level, what is your total carbon footprint, plus on a company level, just like there is a fundamentals financial analysis tab for each company, we do also provide you a climate score per company and a climate performance per company. So what in terms of optimization, what we allow you to do is to basically seed out bad apples, both in terms of financial fundamentals plus in terms of climate fundamentals. Does that? I'm not sure if that answers the question.
Just really quickly, on a slightly different note, you mentioned kind of in the slides a B2B channel. It sounds like that's mostly through revenue from partners, not going into like employee benefit plans and things like that. Is that a correct understanding?
Correct. Yeah.
Okay. Are there any plans to kind of go that route in the future, or is it pretty much on the sort of investor side, B2C is the focus?
Yeah, it is clearly B2C focused for now. And considering that we've got so much to do with all the both financial features plus engagement features, it's not on the near-term roadmap, but I love the idea. It's actually something I would love to exchange more and hear what ideas you have. Yeah.
I guess I'm curious because there's a lot of folks in the adjacent space that are quantifying the impact of public companies and helping mostly on the B2B side, portfolio managers make decisions that are more ESG aligned. What prompted you to develop your own score versus, leverage their API?
Yeah. So first of all, I think it is totally valid to add whatever data provider is out there if we needed more of these data. And for example, what I see is that scope 3 emissions are something that is now slowly being added. So that is something where we clearly want to buy that data. The main reason why we've developed our own score is really that we didn't like that Sustainalytics or whoever big name company you look at, they are not analyzing the emissions trend, and that is it is a fairly simple calculation. Regardless, nobody did it, and that's why we saw a need to actually come up with that ourselves, because after all, what we care about is not only the total level, but how a company behaves and develops. So yeah, that was a quite straightforward answer. We haven't found that to date with any other provider.
Presumably you're starting in the US. I just wanted to see like what are your market expansion plans, if any?
Clearly, number 1, US, number 2, Europe, and number 3, rest of the world. The reason for that is the US is the biggest single market. The data are cheapest in the US and best for US companies in the US market. Also, quite importantly, US investors have a strong home bias. So most US investors invest mostly in the US market, which makes it fairly easy. And then Europe is obviously the next destination, also because ESG here, I guess, even though we have lower numbers of shareholders in most European countries, ESG is a huge topic here, and we might be even more ESG aware than many US states or Americans. And then why is the rest of the world somewhat difficult? Well, the way that governance systems work in Asia are entirely different. And also this trend that we see from shareholder capitalism to stakeholder capitalism is something that is not as applicable to, for example, Asian countries where, if the Chinese government is the biggest party and the biggest shareholder anyway, then, it's a bit of a different case, I guess.